Hey everybody, what's going on? It's James here with Crypto Common Sense, and I'm going to shoot a fast video this morning before I start trading for the day. It's about 7:48 my time. The market opens at 8:30, so I got about 45 minutes to get this done. So long story short, I wanted to reiterate a point that I've talked about in the past on this channel, and that is there is a massive difference between being a trader and a market analyst. We're going to talk about the differences today, and I'm going to teach you another setup that you can use to make a full-time income as a trader trading part-time. But before I jump into the content, go ahead and take a quick moment to hit the like button and also subscribe to the channel. So an analyst is somebody who is trying to predict where the market is going to go. They are looking often at the long-term picture, or at least the months out into the future, weeks out into the future, etc. And part of my role over the last 5 years has been that of a market analyst. A lot of times when I'm doing videos, I'm really doing videos as an analyst, saying this is what I think is going to happen with the market, this is where I think Bitcoin is going, etc., etc. But that is very different from being a trader. A trader doesn't care where the market is going. And as far as my income goes, as far as paying the bills goes, I am a trader. That's what pays the bills. And trading is all about spotting patterns that statistically will give you an edge. So just like a casino knows that sometimes a player will come into their casino and take them for some money. They will beat the casino and take that money and leave. They know that over time they have a statistical edge and they're going to make money. Well, trading works exactly the same way. Professional traders don't win all of their trades. Many professional traders win less than half of their trades. But the one thing that professional traders understand is they only need to have an edge in order to make a really good living as a trader. So I've taught a couple of free setups on this channel in the past, and even though they're free, I don't want you to underestimate how powerful they are. I trade these setups literally every single day. They are part of my bread and butter toolbox of setups. And so in this video, I'm going to talk about a setup that I just call the one setup. And the reason I call it the one setup is because I firmly believe that any person who learns this one setup has the tool they need in order to make it as a professional trader. Kind of the way I approach this is, hey, I'm going to teach you some stuff for free. This stuff works really well. I want you to go out there and make some money with this free stuff. And then after you make money and you say, hey, James actually knows what the hell he's talking about, then you can take some of the money you're making and come join my classes to learn the even more advanced techniques. So let's talk about this one setup. It works in a very simple way. It waits for a range to develop in a market, either after a big move up or a big move down. It waits for a break of that range. It waits for a retest of that range. And then as soon as it eclipses the breakout, if it's breaking out north, this will be the breakout. So as soon as it breaks past that, we look for longs. Put our stops at the bottom of the pullback, and we put a profit target at a minimum 2 to 1. I try to get 3 to 1 out of this most of the time, but it depends on what's happening with the market. If it breaks south, we do the same thing. We wait for the pullback. After it pulls back, as soon as it breaks this level, we enter, stop at the top, and profit target at least 2 to 1, preferably 3 to 1. All right, so let's look at some real life examples. Well, the first one is a trade over on Luna, right? This is actually W Luna over on Coinbase. And so if you look, here's our range. In this case, that range was a beautiful double bottom, right? So we can draw that on there just like this. Well, if the magnet will stop. So there's our range, breaks out of the range, comes back and retests it. So as soon as it breaks this high, we're going to be jumping into a trade. We're going to put our stop loss at the bottom of the pullback. That's a 17.85% stop loss. Again, Luna is very, very whippy right now. Big volatility. That means we take smaller positions. Our risk is always the same as a professional trader. If you're risking $100 per trade and you get a 17% stop, then you're going to take a roughly $500 trade. If the stop was 1.7%, then you'd take a $5,000 trade, and so on and so forth. All right, so 2 to 1 would look like that. 3 to 1 would look like that. So either way, that trade worked out beautifully, okay? We're not going to go into details and picking the targets because that's kind of some of the stuff I cover in the classes that I teach, talking about exactly where to set your targets, how to ride trades, all that kind of stuff. But let's just say that you took the simple path and said 2 to 1. Boom, there you go. 2 to 1. Easy peasy, lemon squeezy, right? You're going to trade here. You're out of the trade a few hours later for a profit. Now, does this only work in cryptocurrency? Of course not. It works in stock as well. It works in Forex as well. Here is a Forex trade, right? All right, this is the Swiss franc versus the Japanese yen. What do we have? We have the move down. We have the range. Also looks like a double bottom, right? There's the top of our range or the top of our double bottom. There's the bottom, breaks out, comes back and retests it. As soon as it takes out this high, we're looking for a long with a stop at the bottom of the pullback. At least a 2 to 1, boom, pop. There's your trade. You're in here, 1, 2, 3, 4 hours later, trade's hit its profit target. Those are 2 to 1 trades in both cases. Think about this for a second. 2 to 1 trades. For easy math, let's say you took 100 trades a month. Again, that's just easy math. Some people take 20 trades a month. Some people take 500 trades a month. Me personally, it varies wildly. Some days I take 2 trades. Some days I take 3 trades. Some days I take 10 trades, right? But we'll say 100 trades for easy math. So 100 trades a month. And let's say that for this hypothetical trader that they're only winning 40% of the time on this. Okay, 40% win rate. That means that they're going to win 40 out of those 100 trades, and they're going to lose 60. Now, if they're risking for easy math $100 per trade, well, on those 60 losses, 60 times 100, they're going to lose $6,000. Ouch. On the 40 wins, if they're doing 2 to 1, they're going to make $200 per trade. 200 times 40, $8,000 profit. So they are a $2,000 profit trader, and assuming they're risking $100 risk per trade, that means that they have a $10,000 trade fund if they're risking 1% per trade, meaning $2,000 profit equals a 20% return on fund. You don't need to win 100% of the time. You don't need to win 50% of the time. You don't need big 10, 12, 15, 20 R trades. Now, those trades take this and amplify the results, right? I like going for 3 to 1s. I like going for 4 to 1s, etc. But I also know that if I'm going to go for a 4 to 1 trade, my win rate is not going to be as high, right? My win rate may drop down to 30% if I'm going 4 to 1. It still works out better. But I'm just showing you that you don't need to be, somebody that is psychic and can tell the future. All you need to do is look for these patterns. It's fairly boring, right? It's a fairly tedious career. I wouldn't want to sit and trade 24 hours a day, 7 days a week, but you can do this, right? You sit down in the morning, you trade for 2 or 3, 4 hours. You do it Monday through Friday on stocks or whatever markets you want to trade, and you should, depending on your budgets, right, have everything you need to live a very comfortable lifestyle. All right. And again, these numbers just go up. As you grow your trade fund, your risk goes up, right? This person was risking, say, $1,000 per trade. Then, of course, from 2,000 changes to 20,000, right? They'd lose 60,000 on the losers. They'd make 80,000 on the winners, right? Same thing. You just add a zero to everything. So $100 risk changes to $1,000 risk. $10,000 trade fund would be a $100,000 trade fund. So on and so on and so on. Okay. And depending on the market, there may or may not be enough liquidity. You always have to watch the liquidity and make sure the pairs you're trading are liquid. Like, you would not have a problem with a trade like this in Forex. Having $1,000 risk would not be an issue because there's tons of liquidity. If you try to take this Luna trade with $1,000 risk, there's probably not as much liquidity on this, and you may have some slippage and things like that come into play. But, again, just to kind of show you, that Luna trade easily popped for 3 to 1. Okay. And most of the time, what I have found is if they go for 2 to 1 on this, they will usually go for 3 to 1 as well. So anyway, that is that's the setup. And like I said, I call it the one setup because I firmly believe that it is the only setup that you need in order to do this professionally. And I want you to go out there. I want you to make tons and tons of money with it. And then I want you to take a tiny little piece of that money, come join my trading classes, and I will teach you other setups that will help you in your trading. And I'll also teach you all about things like risk management, trade management, how to get the most out of trades, all that kind of good stuff. So again, this is James with Crypto Common Sense. Make sure to take a moment now, hit the thumbs up button, subscribe to the channel, and check the description. There's a link down there where you can join Patreon. The 31st of May will be the final chance to join Patreon. After that, I am closing it to new members. And of course, there will be links down there where you can join one of my trading classes if you're ready to take that next step. As always, please remember, I am some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. This is James reminding you all to trade safe. I'll talk to you soon.